What if I told you the entire world economy is sitting on a 50-year-old handshake, and that handshake just got crushed in a BRICS back room in Kazan, Russia, a few months ago? What if the exorbitant privilege America has been flexing since Nixon went on TV in 1971 is about to get Repo D like a subprime McMansion in 2008? And what if the date this whole thing tips over is already marked on the global calendar, sometime in 2026? By the end of this video, you're gonna see the receipts, the timeline, and exactly why the petrodollar, the cheat code that let America print money while the rest of the world ate the inflation, is cracking faster than anyone in Washington wants to admit. Roll it back to 1944. World War II is basically over. Europe's in ruins. The United States is the only industrial base still standing. 44 finance ministers meet in Bretton Woods, New Hampshire, and crown the US dollar the global reserve currency. Gold is fixed at $35 an ounce, and every other currency is pegged to the dollar. America says, trust us. The gold's in Fort Knox. Fast forward to the 60s. Vietnam. Welfare spending. Inflation building. France starts sending battleships full of dollars back to New York demanding gold. By 1971, Nixon closes the gold window and basically turns the dollar into the biggest IOU in human history. But the real power move comes in 1974. After the OPEC oil embargo, Henry Kissinger flies to Saudi Arabia and cuts a game-changing deal. Price oil only in US dollars, and America will protect the kingdom and let it recycle its oil revenue into treasuries and Wall Street. Saudi Arabia agrees. And by 1975, every OPEC country is on board. This creates the petrodollar. If Japan, Germany, China, or anyone else wants oil, they need dollars. America now owns the only ATM in a global cash-only world. Endless deficits become possible. Trillion-dollar wars become just. Add it to the tab. The world needs dollars, so it soaks up America's inflation. For 40 years, the US lives like a global emperor. In 2008, the whole financial system nearly detonates, and we print our way out. The world complains, but keeps holding dollars. By the 2010s, China starts creating its own influence and quietly buying gold. Then comes 2020, COVID. The US prints $8 trillion in 18 months, more money than existed in the entire American economy in 2007. Inflation goes global for the first time in decades. And countries start asking the same quiet question. How many more times can the US hit the print button before the rest of us stop playing along? Then comes the real breaking point. 2022. Russia invades Ukraine. The West freezes $300 billion of Russia's reserves overnight. That move sends shockwaves. If your reserves can be turned off with one political decision, are they really reserves? Russia responds by demanding payment for oil and gas in rubles or yuan. India starts buying Russian crude in rupees and dirhams. Saudi Arabia begins accepting yuan for oil from China. Brazil and Argentina start trading in yuan. France buys LNG from China in yuan. Kenya, Bangladesh, and Pakistan follow. The petrodollar starts dying quietly. Cut by cut, now the numbers. SWIFT dollar share in cross-border payments has fallen from 88% in 2014 to the mid-40s today. Central bank dollar reserves have dropped from 71% in 1999 to the high 50s and falling steadily. BRICS Plus now has a larger GDP, on a purchasing power basis, than the G7. And China and Russia alone have bought more than 3,000 tons of gold since 2022. In October 2024, BRICS announces the unit, a new trade currency backed partly by gold and partly by a basket of BRICS currencies. Testing begins in 2025. Full-scale launch aimed at 2026. This is not speculation. It's official. If rates stay high, the world's dollar debt explodes. If rates get cut, inflation comes roaring back and foreign buyers flee treasuries even faster. Sanctions no longer scare anyone. The weaponization of the dollar simply convinced the world to build alternatives. And that brings us to 2026. The convergence point. US debt crosses 40 trillion. Debt to GDP blows past 140%. And the biggest risk of all, a Treasury market liquidity crisis. Foreign central banks hold $8 trillion in U.S. Treasuries. Every time yields spike, they take losses. We saw a miniature version of this in the UK in 2022. Their bond market fell apart in 48 hours. For the US, the consequences would be global. History repeats. In 1933, FDR devalued the dollar overnight. In 1971, Nixon killed gold convertibility. In 2026, the world may kill dollar convertibility for oil and global trade. 3 takeaways matter. First, the petrodollar system is already dead. It just hasn't fallen over yet. Once Saudi Arabia fully accepts multiple currencies for oil, the dollar's privileged status evaporates. Second, 2026 is not a random guess. It's the scheduled launch of the BRICS alternative, the moment U.S. debt service becomes unsustainable, and the point where foreign demand for treasuries begins to break. Third, this doesn't mean the U.S. collapses into chaos. It means the era of endless deficit spending without consequences is over. Higher rates, higher inflation, and a lower standard of living will define the next decade as the system resets. The question isn't whether the dollar loses reserve status, it's how fast and how messy the transition becomes. And the scariest part is that nobody in Washington is talking about this publicly. The clock is ticking. The rules of money are about to change. If this breakdown gave you something to think about, hit like so more people see it. Subscribe because we'll be tracking every move as 2025 and 2026 unfold. And drop a comment telling me what asset you trust most when the dollar finally hits its breaking point. Gold, Bitcoin, land, or something else. Stay sharp. The reset is coming.